Kenol Kobil they had a $67 million loss for the first half. But I am still stuck on the fact that they chose a late Friday afternoon to report this when all of you guys had disappeared.
Precisely. I think I was just lucky enough to find it before I left the office.
What were you doing in the office at that time of the day?
It was a long Friday and there's a lot of work to get done.
Yes.
But, I mean, given it was a Friday, I don't think I went through enough of the details on that Friday. But the thing is that they had huge exchange rate losses because they had hedged last year when the shilling was still at its record lows against foreign currencies.
Right.
So I think that's what cost them dearly. And it just goes to show the volatility of the oil marketing business, because one day they are the darlings of the market and the next day they're making huge losses, as you said, and just shows that Total is not the only one that's doing badly, and that it's now been joined by Kenol Kobil.
Well, you almost can't compare Total with Kenol Kobil. Total's loss was much more manageable, if I can say this. This 4.2 billion shillings lost in just Forex alone is huge. This is substantial.
It's huge, and the thing is, it's an accounting loss, but it really has implication in terms of investors and in terms of their cash flows, because now they've suspended a lot of their capex programs, and that's obviously going to affect future earnings. So it's not looking too good for them, but hopefully, as I say, if the deal with Puma can be concluded, then at least they'll have more expertise in terms of foreign currency management.
This is a quote from the statement from Kenol Kobil. Management continues to focus on reducing the cost of financing, with substantial measures being undertaken to reduce cash and borrowing requirements. And the clincher here, capital expenditure has also been postponed till cash flow improvements are generated. What does this mean in English?
I think it's just code for they're waiting for the deal to be concluded with Puma, because all of that now comes with at least more uncertainty, because I don't think they'd want to go through expensive capex programs where they're still trying to negotiate a deal with Puma. Plus, all that they're talking about cost of financing will be greatly aided by Puma. So I think they're just waiting for that deal to be concluded.
Has this taken a little longer than they had expected? It's a bit of a headache for them. The employees had gone to court trying to stop this. They've actually, in the last few days, tried to force the employees to sign off on the deal. And that appears to be one of the major stumbling blocks to having this deal go through. And for them, I'm sure they will be quite happy to have the share delisted.
Yeah, I mean, that was the original plan, but of course, in this environment in Kenya, deals are expected to go through. The CMA has got a lot of work on its hands, and the regulators, the competition authority, I think it's only on Friday where the new board and the new commissioners approved, and I think they'll be appointed this week by the finance minister. So a lot of those things are still in the air, and that's what's expected to delay this deal even longer.
So today, though the share closed up 0.67% up at 15 shillings 5 cents, it is not likely to be good today when the market takes in all those news.
It's not likely to be good, but you must remember that what's supporting this price is the expectation of a deal being concluded, and that's what's supporting it. Because had this announcement come and there was no potential deal to be done, then the price would have collapsed, I think.
Let's move on to where I should have started, which is that the NIC hit a 14-month high by the close on Friday, 3,899.62 points for the 20-share index. What's happening here?
I think it was a marginal gain, in my view, given that the rate cut was 350 basis points. And the reason for this is that investors had already priced in the rate cut even a month ago. And therefore, that's why we didn't see a significant increase in the NSE activity. And going forward, at least for the next 6 months, what's going to hold back the market is the election and the political climate. And that's going to hold back investors from taking strong positions in the market.
One of the things about that rate cut you were talking about is that actually banks have started to reduce their interest rates. For instance, CFC Stanbic, just in the papers today, a significant rate cut from about 22.5 to 19%.
Yeah, I mean, it's more psychological than anything, because the cost of funds has been lower for the last 1 or 2 months, because the CBK has been injecting liquidity in the market at much lower rates than the 13.5%, and T-bills had already been below 9% even before the CBR rate cut. So it's more psychological than anything.
All right, I want to move on to NIC Bank, whose rights issue, the trading on that just closed on Friday. It actually did quite well. There's strong demand from what I can tell for both the share and the rights issue. 22.9% up is what, down actually 10.05 is where it closed. But overall, what did you make of that?
I think there was strong demand for the rights, I think more than any we've ever seen so far. I think the rights were trading at around 14 shillings 50 cents at their highest.
Yes.
And that would have implied a price of almost 37, 38 shillings per share. So there's a lot of demand from investors for this counter. And primarily what it just shows is that when they came into the market in 2007, they've managed to grow their balance sheet significantly over the time, and expectations are that they'll make good use of this rights issue, just like they did their last rights issue. In
full disclosure, you're actually with NIC Securities.
Yeah.
Yes. Let's move on to Safaricom, which is one of the counters most traded at the stock exchange regularly. Yeah. According to the sustainability report it put out last week, and we've had time to look through it, it's over the last 1 year let go of at least 70 staff because of theft and bribery, just trying to make sure that such disclosures are made according to fraud. Is this anything unusual?
It's not unusual. The only unusual thing is that they're coming out and saying it.
Yes.
And I think it's an important move in the market, particularly as you've seen in terms of the World Economic Foreign Index. Kenya's lost ground in terms of its competitiveness, and one of the reasons for that is like poor corporate governance standards in the country. And I think it's good to see Safaricom taking a lead in this and producing a sustainability report.
All analysts generally agree that companies don't like to talk about things like this because it's seen almost like a sign of weakness, and you should be able to have nipped these things in the bud.
Precisely. And we don't expect to see it in banks because of the reputation effect. So at least it's good for Safaricom because they are market leaders and they're leaders in corporate governance even. And I think it's good for the market.
I want to move on to another one, which KCB. It witnessed a lot of strong foreign investor participation, actually hit a new year high at about 26 shillings 25 cents, up 1.9% week on week.
Yeah, I mean, KCB, you must remember that they've got the biggest balance sheet in the region.
Yes.
And yet, in terms of market cap, they're below Barclays and Equity. So that implies some sort of undervaluation on the counter. And I think that's why, I think over the next few months, we'll see KCB performing very well because they've got a good dividend payout policy, and they're growing their balance sheet aggressively, and they've got conservative funding. So I think that's one of the biggest attractions for KCB to both local and international investors.
And it's also a very strong regional player in the banking scene.
Precisely.
All right. Pan-African Insurance was actually the biggest mover last week. It jumped to the top of that. I was under the impression that we'd gotten over the fact that they had good results and moved on. Yeah. Apparently investors have not.
I think there's that, as well as the fact that now I think the tender offer is still going on from Sanlam.
Yes.
So I think there's an anticipation that Sanlam will pay a premium to the price, and investors just taking positions prior to that deal closing, that window closing.
Let's move away from the NSE and talk about the shilling, which has recovered slightly because of the rate cut obviously has given it a bit of a lift. The CBK is still mopping up activity. What are your long-term views on the shilling?
I think long-term, the likelihood is that, I mean, there's a lot of news coming into the market. First of all, you've seen that there could be gas discoveries off Mombasa, and that could spur more FDI in terms of the oil and gas sector. And if that materializes, then in the next 6 months, we could see a strengthening of the shilling. However, if you look at the fact that the funding costs for taking long dollar positions is much lower than it was, as well as the fact that there could be the political risk effect of the currency, then there could be some basis for the shilling weakening. So I think on the balance, we could see the shilling weakening to around 86, 87, but not bigger than that, just mainly boosted by the oil and gas sector.
I know one person who would like that, Ken Okobil.
Yeah, I would love that.
Let's finish off with the season of unrest, as I'd like to call it in Kenya. The teachers are on strike, the lecturers are on strike, doctors now threatening to go on strike. Are investors reading any of these and worrying about it, or they're just like, no, that's none of our business?
I think it's something to worry about because in the market over the last 5 years, since 2007, I think until 2011, average real incomes have been declining in terms of the fact that inflation has been rising faster than the cost of living. And of course, that is a serious consideration for investors.
Yes.
Because even in terms of manpower, in terms of political unrest, there's a strong something to consider. And I don't think investors should take it lightly, and neither should the government take it lightly, because this is something that should be arrested immediately. Otherwise, it will continue to fester.
Purely on a basic front here, these things tend to happen when there's an election coming up, because then the government's hands are tied. You don't want to lose that strong voting bloc.
Yeah, I mean, it's true, but also you must remember, where there's smoke, there's fire.
Yes.
And the fact is that real incomes have been on the decline. And in terms of the purchasing power of a doctor's salary 5 years ago compared to what it is now,
yes,
it's not as much. And if you look around, the fact is that businessmen are getting wealthier, and there's a lot of corruption in the government. So these people are seeing people getting wealthy, but at the same time, their earnings remain marginal. So it's serious.